That's something you ain't got. Let's go courage. Okay, right, let's announce this bitch. Taking the photo. Let's get the live link. Yes, people, what we're saying, who we got inside? Swiss has hit TP1 and GU is looking like a trade is setting up. Just sharing the link out now. Let everyone know we're live. Yeah. Something in there then. Right, post on Snapchat. Get it up and get it. Post that. Bosh. Where else? Pop it in the telegrams. There's that. Bosh. Right, that's out everywhere. Cool. Let me load up the chat, see what we're saying. This is looking like a trade already. I haven't really marked up my sessions and stuff. So let me do that before I check chat quick. Just bear with me. So sessions, irrelevant. That one's relevant. So Asian high got sweeped, faked to change of character and then pushed higher. So we're looking for a bullish London session. That is liquidity. That's a low. So let's see where our past these can all go for now. Oh. I think they're just lines, aren't they? They can go. What's the next relevant level? this London session high up here, fucking hell, got a long way to go. Good for us. There's a session range. Is there any sorts of I guess you could say that's liquidity. Big fair value gaps there as well that we'll analyse. Put that there. So you see what I do here is I mark out the levels that price is likely to be drawn to in terms of if price reaches that point, would the market reverse? So that gives us sensible trading ranges, and it also gives us targets that price might be getting pushed towards. You can see we've got a healthy uptrend here. The 10-minute is acting as support quite nicely, which of course is just the 100 EMA on the 5-minute. So we've got the 10-minute and also the 2-minute. So this is realistically just hitting the hundreds. So I'll put my 100 EMA on, and then I can look on the 1-minute to see that, and I can look on the 5-minute to see that. Okay. In this scenario, where you've got like 2 time frames at work, so this works on the 5-minute and this works on the 1-minute. So your question is, which one should I look at? First of all, the 5-minute would have a much stronger, like higher power than the 1-minute would, but you kind of have to analyze what price is doing. So if price is very bullish on the 5-minute, okay, which it is, you look at these candles, the gaps it's leaving behind, then price might just keep on pushing higher without coming back down to the 5-minute. So that gives us an opportunity here. And this is the reason that we look for confirmation candles before we enter. Because if price does just want to tank down and then bounce off that 5-minute EMA and completely disrespect the 1-minute EMA, we would see that here when we're looking for this retracement, because we wouldn't have the candle confirmations to enter in the first place. So that gives us a margin of safety. And even if we fail and we take a loss on the 1-minute, you can go to take both, because if the win on the 5-minute is made, then it overpowers the loss that we would take on the 1-minute. So that's usually how those play out. If you are uncertain, it can be better to just take the higher time frame one, so ignore the 1-minute and just go for the 5-minute. This should be here. That liquidity there. The reason I don't mark up that level, the London Open, as a session range, is because it's not truly a session range yet, because we are currently in the London session. So it's not really fair to mark that point out as a point of reference. Okay, cool. So those are the key lows I'm looking at. Those are the key highs I'm looking at. I also told you that we had some fair value gaps by the look of it that might be of significance. Yeah, so we've got this one here. I'm interested in seeing how that one got delivered. Currently in that right now as we speak. And then we also have this area here that is fair value. That's 2 separate fair value gaps that I'm just simply combining as one, because it's back to back, but technically it would be from there to there and then from there to there. Cool. Alright, so that's top down analysis. Now we want to see what this bad boy does intraday. While we do that, let me load up, see what we've got inside. get this beer loaded up. Morning, brother. Morning, bro. We've got CM and we've got Rio. Good morning, Vietnam. PMI at 11:30. I assume that's your time. UK time, that is at 2:45. So when the stock market opens at 2:30 UK time. I'm in Thailand, so I'm +7 of the UK, but I still work, like all of my computers and shit are set up UK time. Because that's just how I understand how all the news timings and FX timings and stuff work. I see some people that learn ICT and SMC and like they go off like US time, so they refer to London Open at like 3 AM, and that shit's just way too confusing. Like, definitely learn it in whatever time frame works for you. I've been there where you try and like work in New York time and you're not in New York, and it just doesn't fucking make sense. Like, you're having to add extra steps onto just understanding market session times. Doesn't make sense. Working, like, I think you should personally work in your own session times, and then just that calculation based off of what time it is now for you. And then it becomes a little bit tricky when you're like me and you move country for like a massive time difference. But now I'm still working on UK time that I then have to relate to like other times and stuff. So that's always fun. But yeah, GU, I think we're going to look to take a retracement on this. If price retraces, should I say, like that. That's my lineup for now. We'll see where that lines up when price does come back down. Obviously we've got all of this imbalance from like there to there. It's just pure imbalance. It's gonna need a bit more efficient order flow to be maintained. So yeah, there's a few different points we could take this from. I could take it from there, could take it from there. For now, I think this is the best one. You've got this little series of highs. The price broke above. That's going to act as support. So yeah, I think this looks good. Quickly, I need to declare this TP1. So this is the trade that we caught yesterday. If you remember, we was eyeing up GU and U-Swiss. I decided against GU, so I said because of the 5 clear waves that we've got, I'm not even going to look for an entry. We wouldn't have got it anyway. We were looking for price to deliver like down to this region down here, but it was too bullish anyway, and price retraced off of just tapping that FVG. That was a 4-hour fair value gap there. The price just tapped into and bounced higher. So that took off without us anyway, but we wouldn't have entered even if it did come down. So we decided against that. U-Swiss, we got a very good entry on. So I told you this previous accumulation of resistance, support, 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 resistance, resistance. Called out that level again. It perfectly tapped in on that hourly candle, and then price just had a wick through it anyway that secured it. But yeah, we entered in that wick, which was nice. We had this fair value gap on the upside and then this fair value gap on the downside. When that happens, it's called a balanced price range, and it is a very attractive zone in the market that needs to be recovered. So it's even more powerful than if you just had one fair value gap when they overlap. So that got delivered. We got a very nice entry for a 5.7R trade from that level there, which is our 78.6 fib. That tagged us in, and we've just took TP1 just moments ago for 3.17R. If I load up my MetaTrader 5 to show you that, Bosh. So we're currently in this running £3,000 profit floating, and this has just closed out £3,000 profit. So the two losses yesterday, which were about $2,500, I believe, in total. The fees on that must have been crazy because it's not actually recovered that. It still says that I'm down. Oh, sorry, they were 2,400 lost the first time, 2,000 lost the second time. So yeah, that was a total loss of about 4,500. Just made £3,000 from that, and then floating, we're up another £3,000 floating. So this is brought back into positive now. So yeah, don't worry about taking losses in trading. Your wins make them back, and that's what's important. So we had two losses yesterday, and now we've just hit TP1, and this has already brought it back into the positive. Do you know what I mean? So I'm really not scared of losses at all when you know that you've got a system that works. So I just need to declare this into our groups to let everyone know TP1's been hit, like that. Bosh. TP1 hit plus 3.18 R. Cool. So that's a little bit more settled now. So what we're looking at, yeah, is this on GU. So I get a bounce on that. That would be nice. EU is not really seeing the same thing today. A little bit further ahead. The EMAs aren't lining up as nice. Got this on the 5 minute, but it's only really had, yeah, it's had two taps actually. As this broke above, it retested it on 2 candles and used it as support. So this one we could take on a 5 minute as well. Let's line this up. Morning, Lewis. Hope you're good. Let me get rid of this junk. Okay, cool. So the euro, interestingly, is coming back to that high. So if I show you the euro higher time frame, that's broke out of that substructure now. So we call that the break of substructure, or boss, as we commonly call it. So wait for substructure to form, tick. Wait for a boss, tick. Now we wait for a valid setup from this, which would be refilling one of these gaps. Okay, so bear that in mind. So we broke out of this trend now, and what I was going to show you is this daily low. So these daily lows, which was support, those double tops, which were the high. So this was our like daily sideways range. The price was bound between from like December 2022 to only recently at the end of December 2024. Price broke beneath that solidly, and we managed to catch a trade selling it lower. We were looking for price to continue lower with our stops at break even. We already cashed out 3.5 R on that, but now price has actually broke out of that local trend higher and has used it as support to push higher again above our substructure. Could this be the rise of euro back into this range? That's your idea for the day. Or is this simply breaking out, using this as resistance, and then going lower? Okay, so this is what we're looking at here. Our setup is telling us to take this trade higher, and obviously the way that we trade, similar to how we caught this as a sell lower, cashed out profits at certain points and then put stops to break even, so that even if it didn't go lower, we've made money from it going lower in the short term and then reversing. So even if this isn't the scenario and it does go lower, we can cash out profits at that recent high. So that's the beauty of my strategy. So yeah, we're at an interesting point on the euro. That's what I thought I'd mention. Now if we look from our, oh, this has come back down. Maybe I should just have eyes on this rather than getting carried away with all that, because this might come down to enter. Again, this isn't a limit order. We need to wait to see some confirmation first. That's there, and I think that's at 71. Cool. Right, so this would be should be a 3.35R trade with a 12.6 pip stop. Spread on GU is currently 3 ticks, we'll call that. Yeah, 3 ticks. Let's price it up. What's that 5 minute? Time frame here at the top, where whichever one I'm on, it'll flag as blue. I do often switch between time frames, so check here at the top. I'm usually on the 1 minute or the 5 minute when I'm looking intraday, or I might be on the 2 minute or the 10 minute for a different view as well. So 12.6 pip stop on GU. Let's just price this up for now. This isn't a limit order. We need confirmations for anyone that's just joined. So let's price this. So we go FX Calculators app, position size, select your currency, select the instrument, which is pound US dollar, account size, risk per trade, and then you want to enter this amount of ticks. So this is 12.6 pips plus the spread on your broker, which for me right now is 3 ticks. So total is 12.9 pips. So that's what you enter, and then it will spit out what position size you need under the standard lot. So I need a 5.5 lot if I want to risk 1% per trade on a 200k account. So I'll bear that in mind. What I actually do is I type that on my calculator and have that out in front of me while I'm waiting for it, just so that I have it in mind and don't have to open that app up again. Got a question. Do you ever look for fib extension rejections on the higher time frame? When I'm looking at fib extensions, I do plot them on the higher time frame for some rough idea to where price might go to before reversing, but I don't take them as science. Just how like with our with our GU position, I was looking for the 71 here, but it didn't hit that. Didn't even hit the 61. So whenever I'm looking at fib levels, all they really do is give you a level where you can have a big enough risk to reward ratio that gives you a decent amount of gain when you win compared to the amount that you lose when you lose. They're not so much a science as like it will come down to this level and it will go to that level. It's more like if you use those levels, you're going to make good money. That's how I see them. So I'm not looking at them to like perfectly be respected as a science like that. Yeah, if that answers your question. They're more just like, if I use these levels and they do hit, I'm making good money. And they do often get hit, like there's a reason the levels exist, which I'll go all into on the course that I'm putting together, and deriving where the numbers come from and where else they appear in the universe. Some crazy shit with fib levels and the Fibonacci sequence. Like it explains how pine cones are formed, how a snail shell is structured, the fucking solar system. Like these are like, it's a very like arcane branch of maths that you can go into. I'm back. Just went on mute for a bit, went to get a drink while we wait for this. Could you explain the difference between substructure and structure? Yeah, I will. I will do that at some point. I know everyone's interested in the boss strategy and what makes it different than just normal structure. It's mainly when you have a breakout. It's the reverse of structure. It's like a little point in time where structure is breaking, and it's the exam that you give price to see, is this actually structure or is this just like a fake out? Bro, do you have all this written down in like a course? I'm putting a course together at the moment. I've got a couple of chapters done. It's going to be a full video course going through a complete A to Z of every single aspect used in this strategy, as well as other concepts in trading that like I don't even use myself, but it's better to know them and then know that you don't need them than to like not understand what they are at all. So for example, like market patterns and chart patterns and stuff like that, like I don't really use any of them, but it's important to understand when they do appear, so that if you're thinking from a market maker's point of view, how you would react to that in the price and where price is getting delivered to and stuff like that. So I could quite easily be one of these fucking retail trading guys and be like, oh my god, this is an ascending triangle, and then do one of them fucking stupid videos where it's like, that just doesn't happen like that, you know. But it's important to understand when it's in the market so that you have a wider concept of trading. Most of that I'll give away for free. Like in terms of the whole course, all of that sort of stuff, you'll get that for free. because the way I see it, it's, yeah, I can just package it together and give you guys it for free. But all of the actual like nitty gritty parts of the strategy that you need to develop an edge, like that is pure value. So like with anything in business, like it's gonna have a cost. But I will give away most of it for free. Yeah, Euro I'm not really liking as much. Let's look at GU. What you can do for now, Jogo, is we've got the VIP group and we've got the free group. So in the free group, I give away one free setup a week. Usually my first trade of the week will go in there for free. And then with the VIP group, everything that all of my setups are in there. All of my setups. I've got a lot of fucking build. I'm sorry for that. I've got a lot of building going on in these apartments next door. Either that or someone's going at it. But it sounds like a power tool to me. I got an alert on USwiss. I don't know what there was. I think that's just my TP1 alert still on. Get rid of that. Stops. If you're in this from yesterday, stops are now at break even. We've took TP1, so take 50% of the position off there. 25 there, 25 there. Whenever I'm in a challenge phase for prop firm, I just do 50% there, 50% there, just to speed it up a little bit. Because what you can have sometimes is price hits your TP1, reverses, hits your TP2, reverses. There's like ABC, you're still in, but then like takes a while to get back down to that TP3. So yeah, bear that in mind. So if you see my account now, I've took half out here, so the 3k made there, and then I've got half running there still. So this is phase 2 of a 200k challenge. Passed phase 1 in the first 2 weeks. Took a couple losses yesterday on the intraday, which is fine. Made those back with this one USwiss trade, so we're now in the blues again with this one. Set an alert on TP2. I'll set an alert on my entry, which is now my stop loss as well. So you can see that fair value gap got filled. This fair value gap got filled. So we can pull them away. And then if we want to stack this, well, let's check on this. Nope, nothing. If you want to stack this, you can have a look on the 15 minute, okay? And then I'll show you about the fractality of price. So what we're looking at here, same pair. We'll check the corrective structure on the 15 minute. So just bear with me. The blue lines, let me make this one blue as well. The blue lines, dark blue lines, correspond to the 1 hour time frame. I'm going to price this up again for a trade on the 15 minute where we're going to look to stack. So this is our corrective structure on the 15 minute in the form of, you would call it, see, this is the thing about Elliott waves. Okay, they are quite flexible because realistically you could say that's a 1, 2, 3, 4, 5, 6, 7 waves high. Okay, but retrospectively with Elliott waves you would basically just say A, B, C like that because it's counter trend. So this is why I told you yesterday, don't go too deep into Elliott waves and start thinking that it's some form of science that has to happen. Understand the basics of it, and that's all that you need to know, and then it can help you. But if you go overboard and start to try fucking spot these crab and butterfly patterns in the market, you're going to drive yourself batshit crazy. So this is our break of structure on the 15 minute. Okay, again we'll make it purple for the 15 minute. Check on GU, nothing. This was the breakout. This was our substructure. on the 15-minute, this broke. So that's a break of substructure on the 15-minute. Make that purple. Then what happened is, after this break, I would plot the high to the low. Okay, made another low. Okay, made another low. Okay, made another low. I'd say that was the first proper low when it found its base. Didn't come up to our levels, so we wouldn't have got an entry there if we were active. It came up to the 38.2, which is a sign of an impulsive move. Okay, then it went down. You would then say, okay, this is your next structural break, or maybe that one there would have been. Yeah, it would have been that one there. That's the one we used as the low, isn't it? So this would have then been your third break of structure. 1, 2, 3. This one there. If you were active at that time, 7 AM this morning, you could have caught a trade off of this high to this low. Price came up, whichever key level you were looking at, so you had a fair value gap all the way up to that 78.6. You could have caught your entry there. Stops a pip above that high. TP you could have plotted at the bottom of this trend there, like that. That would have given you a 4.3 R trade, like that. That's how you would have stacked a trade on USwiss. I wasn't really active at this time on the charts, wasn't in my trading plan, so I missed it. Okay, but that's how you can stack trades with this strategy as well. The same concept as what we're doing on the 1 hour and the 4 hour to get the initial entry. Okay, see how you see that? You see how price is fractal? It's the same as what we've just done, but within the trend that's already moving. Okay, so that's the fractality of price. The way that I describe it is, it's like when you're looking at a leaf under a microscope and you go in and you're looking at all the cells and stuff. Like that is valid as well. So that's how different time frames work in together. So you would have seen from that we had a break of structure, break of substructure, third break of structure. We've now hit the bottom of this, which was the bottom of our first break of structure. That's what I use as the trading range for trading this breakout. So we can't now stack further entries on this 15-minute. Plus we've already had the 5 waves. Okay, so 1, 2, 3, 4, 5, and I know that because we've had the third break of structure. That's as much as I use Elliott waves. Knowing to trade only the first 5 waves, which fib levels they might come back to, and that's it pretty much. So don't go overboard with that, trying to look into like all these different extra things about it. You don't need to. What I want to see on GU is I want to see price come down to this zone, show us some form of candlestick rejections, then we'll take the trade long. We're not just blindly selling on a limit order. Morning Declan, hope you're well. So on this 15-minute, by the way, since we've had the 5 waves of this, what we want to see before we start looking for those 15-minute entries again is we want to see this trend break. Okay, and you might think, why on earth would you want to see that if you're in sells? And it's simple. We need a correction like that in order for this to be a healthy downtrend, and then we continue the 5 again. The way that we catch a further stack in this is this being broken. Okay, once that's broken, we wait for a suitable entry from this, and then we'll catch a short like that down here. Okay, that is my schematic. So no further trades on this, short until we see that. And that's how I catch all my entries, including this one, like you see here, where we had breaker structure, breaker substructure, catch it on a retest. So I think to make this less cluttered, get rid of that now, and I can put some comments on here saying 15-minute 5 waves complete, wait for a correction higher, breaker structure, breaker substructure, and then stack shorts. Cool. Now GU, this has hit our TP3. Let me move these out of the way now. They're not relevant. So bang, this hit our TP3 as well this morning, like that. So that needs an update too. So the final 25% that we had running, so of course we took 50% here, 25% here, and the last 25% there as well. So that one's hit TP3 in full. And we're now interacting with our upper trading range, which was this local trend line there. So let's get rid of those. We'll show this. Let me show you that before, what it looked like before we entered. Find it, GU. This was a while ago now, wasn't it? 17th of Jan. Yeah, I got it. Let me just check on this first. Set an alert on that so it doesn't catch us off guard. Right, how do I move this onto my other screen? Pop it out. Yeah, there we go. So for everyone to see, this was our setup on GU. Not that one. This one. And that 1 hour. So can get rid of that. That was just notation for looking for a re-entry that we didn't get. But here, that was how we were looking at it. So had the break of structure off of this blue line. This was then our substructure, this high. Price retraced, used the initial trend line resistance as new support, pushed higher. Once this structure broke, we had a break of substructure higher. Then, like I said, we simply look for a pullback to one of our key fib levels to trade it higher. Like that. Okay, so break of structure, break of substructure, and now we initially looked for this 78.6 level. And if you remember, this wick didn't tap us in because it was like a pip off, okay? If we stayed patient, we actually would have got that re-entry on that 78.6 level to go higher. But we didn't. What we did is we played it a bit more sensible and we moved our entry up, going off of this bottom instead. So it's from this wave here, retracing, hitting the 71%, stops beneath the low, and that pushed us higher. So that was this. Oh, it's gone. Where's it gone? There we go. That was this signal that got sent into the VIP group. Okay, and that is a 4.4R trade that has just been hit. We got into that on the 17th. A week later, we've made 4% from that. So let me update that one. GBP USD TP3 hit plus 4.37 RR. Bosh. Cool, so we've had this TP hit today for 4.37, and we also had this TP1 hit today for about 3.18 as well. So that's like 7.5% worth of TPs hit today. Pretty good. We've had worse days. Look, we're just playing ping pong with GU at the minute. We sold it down, hit TP3. There was a stack for 4% on the 15 minute. Price came up. If you remember as well, we actually caught a 1% from this drawdown on the intraday. Trading that low intraday, made 1%. The swing stayed in and we've hit TP3 on 4.4. So, you know, find me fucking someone to have a trade war with, and I will, where we both go head to head and say, look, we'll both trade on the same time, go live, see who can make more money. Because there's not much that I missed there. Like, I traded the whole wave down, waited for the consolidation, and then traded it higher. Pretty clean. While I was actually fucking trading it intraday as well. So there was a lot more. If we look intraday, there's a lot more profits that I made intraday from it as well. There's one, there's one, there's one. Very nice. Get rid of that for now so it doesn't block the screen. What I'm really looking for here is this to come down and react with our zone, which is not quite done yet. It's showing early signs of it, but we haven't quite got that just yet. When would you say you're finding entries for the most part? If you mean time-wise, it's usually London or New York, but I do sometimes get them in Asian sessions. That's why I go for limit orders. So this one, if we're going off UK time, this one tapped in at 3 p.m. This one tapped in at 7 a.m. That one tapped in at 9 a.m. This one tapped in 11 a.m. So usually it is London or New York, but I can also get entries in Asian session as well. Intraday, I just trade this in London. Okay, so that is quite some strong rejection. Hasn't came down to the fib, so I might change my low to this. Change my level to this. That has been rejecting the 61.8 now from that wave, and then I might look for a re-entry on the 71 like that. TP2 is closer. And we would want a retracement to tap us back in. Okay, so based off of this now we can use a limit order from that. if that wants to tap us back in. 3.35 still, 11 pips stop. Spread's 3 ticks, so need 17.5 lots. Let's go for it. GU, new order, pending by 8.75 lots. Entry. Stop. Cool. Double that. And then have my TP2 in this one. Have my TP1 in this one. Cool, so that's waiting. If that taps us in, it does. If it doesn't, it doesn't. Send that out to everyone in the VIP. That is a 3.35. Cool. We'll see. Might not tap us in. It's not the end of the world if not the way. Believe we have something going on. That's not in anymore. This one's in. NU, yeah, we've got some setups on NU and AU. Can look at while we wait for that. And this low to this high. We're still waiting on the highs to occur. And then this is basically giving us a trade here if that pulls back. Similar story on AU. Take that off. Take that off. Make that a little bit neater for the 1 hour. And then yeah, similar thing. This pulls back, trade it higher. I like the idea of those. And yeah, this, what we want to see is something like this. So that schematic for a re-entry. Trade war. Yeah, who can I trade war with? Who's actually a real trader? Who's relevant? I would say FX Alex G, but you know, doesn't actually do real trading. Just scams people. Or trades off camera and then edits it all together on his fake broker. Okay, so price is coming down to our entry. See if we get tagged in. Let's wait. Let's see, in order for this to tap us in, it needs to swipe this liquidity from any early buyers, which for us is good. So we'll just see if this does tag us in. I wouldn't really adjust my entry any higher from this. We already did that. Like, this isn't actually the low that we're taking the fib from, so we've already gave it some slack so far. Okay, so with this looking like it's going to break those highs, yeah, there you go. It's probably not going to come back down to this entry, which is what we needed to take a trade here. So what I'm going to do is cancel my limits and we'll look to find another entry point instead. So take all that off, cancel the limits, and look for another entry instead, which could be in the form of this, where we look to take a buy there. I wouldn't normally do that because this high needs to break for me in order for it to be a higher high, but it looks like we've had that correction and now we're starting a new wave structure higher. I'll have a think about that actually. I might not do that, and I might wait for a 5-minute entry instead, in price coming lower, fill in this imbalance. So we'll see. That's a bit too deep to pull back to from this low. This might be what we're looking at instead. Still early in the session here, we're about halfway, so we do have time if this wants to pull back down and this be the trade instead. That's probably a better option for us. Maybe that's just double top him. Let's reline this up and see. This low to this high. It's not really going to hit that 71 level. I don't want to take it off anywhere else. Let's give this a chance. First of all, I need to get the message out to remove limits. Now we'll look at this one. We need some new confirmation on this entry. It's not a limit order. Four pip stop. I could even look to take it to that high for a TP3. So we want to see, I don't really like that, you know. I don't like that because it's not actually a high because this is the high, so take that off, don't like it. These sort of ones are tricky because it's posing as higher low structure, but it's not, because this is the higher high. All of this is just noise in between the actual high low, higher high. So they can be a little tricky, those ones. Okay, cool. So this trend line is now broke. That's what we wanted. If you remember, we said this is 5 waves. We want a correction now, which will take out the previous highs to do this, and then wait for that to sell off again before we start stacking. So that is good for us. Apart from that, we're kind of just looking at AU and NU. GU, we will have something from that. We just need to wait to see what happens with this trend line. And if not, then it'll be a case of waiting on that level to break beneath. So the range that we're enclosed by here is this black trend line that we'd want to see break a structure, or this blue trend line here that we'd want to see break structure. There is also this, but because it's on the 1 hour, I don't know, maybe could see something on the 15-minute down to this range, but it's kind of a tight range, so you can't really do too much there. Let's just wait. We've got better setups on the others. They're like ready to go. So I don't know, this could have been a trade, maybe, but it's not really high enough conviction for me to take. I'd rather wait for the 5 minute to come down here and take this one instead. Got a question, is FXLXG a scammer? Yeah, I'm pretty sure he is, mate. Like, it's hard to say. I don't know if his strategy actually works or not. It probably does, but all of his marking that he does is scamming. Like the whole $100 to $1 million in a month was a scam. Basically, you know, he had his own prop firm, right? The whole Rocket 21. That was just a rug pull on everyone as well. What these guys do that fake their trades is they have something like that where they either have their own broker or they have their own prop firm, or they have access to one. And then what you can do from there is how you have the fucking bar replay on TradingView where you can like go back in time and analyze shit. If you have your own broker terminal, this is why he never shows what broker he's on, okay? So if you have your own broker terminal, you can do something like backtesting on TradingView on your actual MetaTrader, where you just put trades on the account that happened in the past and say you did them. So the whole like $100 to $1 million, like he didn't actually do that. He just put trades on the MetaTrader and said that he did them because he has access to the broker. There's a reason he didn't show what broker it was on. So that's a scam that these guys will do. With him, I don't know if he actually has a strategy that works and then he does all the scammy tactics for marketing. But you think, like, if this guy actually turned $100 to $1 million live and there were millions of people watching it, why didn't they also just take the same trades as him and also just create like 3 million other millionaires or however many people watched it. Doesn't make sense. It's because it's fake. And likewise, like if you own your own broker terminal, you could place all of the trades live, and you can actually go back and delete trades from the trade log. If it's your broker, like you can just lie and say you've done whatever on there. You can fake withdrawals from it, all of that sort of stuff. So yeah, pretty sure he's a scammer. If you type in Wall Street Police on YouTube, they've done a whole breakdown on his tactics. Could you show how to draw an order block? I see it done differently sometimes. Yeah, so order blocks, I don't use them massively in trading, but order blocks are basically the last candle in the opposite direction before price moves in the upwards direction. So for example here, where you had a huge move up that had some form of like imbalance with it, this candle here is the order block. So there, so like you say, they are a little bit subjective and people draw them differently. For me, it's the last candle in the opposite direction before a huge move up that price didn't already like fill in before doing that move. So it's sort of like how you've got a fair value gap. It's the empty candle that price hasn't came down to yet. Same is true with the order block. So like that candle there is mitigating this order block because it's re-going over that candle. It can also happen like immediately after the thing usually to cover it. And if it doesn't, that's when you've got an order block. I would usually only consider order blocks in which you have some form of break of structure afterwards and leaving behind leaving behind a fair value gap as well. They're the ones that I'd consider. Otherwise, like you could class anything, like most candles, as order blocks if they're the last one of a range. Yeah, so with order blocks, I only really consider the candle body with them, and I think that's pretty fairly accepted as well. But like I said, some people will draw them differently and consider them differently. I would personally only look at the candle body for an order block. Looks like that 1 minute trade would be pushing up nicely if we took it, but for me it's a bit of a misleading. We would have obviously got in at either the 71 or the 78.6, but yeah, for me it was a bit misleading because this isn't actually higher high, higher low, because you've got this higher high up here, so it's not a high value setup for me, but it looks like it would have been pushing up nicely if we did take it. But I've got no quarrels with not taking that. I mean, this as a wave hasn't really came back at all from this high. Does it hit the 38? No, it's not even came back to the 38 level yet, so I do think that's probably got some more retracing downwards to do before it bounces higher. Bit of a slow one today, guys, I know. But like I said, they happen. Can't expect to trade and it be all guns blazing every single day. If we check up on that 1 minute trade that you could have taken, I believe it would be from here. So it would be back down at break even, heading into drawdown right now. So I think not taking that was the right idea. The reason we didn't take that is because it's not actually price making higher highs and higher lows like it may seem, because this is your higher high. So until that is broken, price is actually still just within a wave. So that kind of disobeys the rule of the strategy. I don't know, it might still win, but for me that's not a valid setup. This one is, if we have this retracement. So that's what we're waiting on. Trading is a lot like being a sniper. And I'm not talking about Call of Duty sniper where you're running around quick scoping. It's more like laying on the top of a hill with a fucking nappy on while you're waiting for the shot. And it can take days. Right, so this level's dropped, coming down to our entry. So that shows that this trade here, which was lining up, wasn't a trade. It would have hit a stop loss. Okay, so we were right to not take that. Although it might be a bit more boring to not trade, you know, you've just saved yourself from a loss. So you're welcome. Okay, looks like price is dropping down to our zone. It's not lining up too well with the 71, so maybe we'll get a trade on the 78.6, which is nice. So yeah, same as usual, we want to see a rejection from within this zone in order to take the trade. And it's worth noting that with this reaction to the EMA, there has been plenty of times where prices came beneath. I'm not going to count this one because this was during the Trump speech, but there has been plenty of times where the EMAs came well beneath the where prices came well beneath the EMA before bouncing. So it's not like we're expecting a direct tap of that EMA. So with our stop loss, we need to bear that in mind. So we'll just line this up for now, but it's not set in stone yet. Okay, so it's coming into our zone. Just put a message there saying waiting for confirmations before an entry, just so people don't think we're blindly entering in this. What you want to see is some form of candlestick rejections within our zone to tell us that short orders are turning into long orders, and something to add extra confirmation and extra confluence to our trade. Not got too long left in the trading range here, so I'm not getting my hopes up for an entry. But we can see what happens. I believe that is a session range there. Let me line that up a bit more in screen. Just like that. If I'm entering on the 5 minute, I want to see 5 minutes worth of rejection at least. This is a 11.2 pip stop. With that, GU spread is currently, call that 3 ticks. Oh, it's fucking shot up to 5 there. Yeah, we'll call it 3 ticks. So we need to enter 11.5 pips into our FX calculator. To see what lot size we need to trade. I need to trade 17 lots. 17.3 lots to be precise. But before that, we need to wait for some form of rejection beforehand. I'm going to correct that to a deeper level. That brings that down to a... Right, that's exact. That's exact. Those are exact. So yeah, still the same stop loss size. I've just moved it down a couple ticks. Do our little graphic here, like that. So, to be honest with you, none of this is really interesting me. Even if this candle closes above that high or that high, you wouldn't really class that as an engulfing candle yet, because it's taken more candles to engulf less candles. The rule with engulfing candles is it's usually where one candle engulfs like the previous 2 or 3 candles, for example. And then if you're to dissect that even further, the general concept behind an engulfing candle or set of candles is that you have less candles here engulfing more candles here. So even if these 3 candles engulf this one candle, that's not a engulfing candle or tweezer bottom in any way. So none of this is interesting me at the moment. We've got about another 13 minutes left of my trading range, so it's probably unlikely that we're going to get an entry here, because that would require price to come all the way down, show us some form of 5-minute candle, and then give us an entry. So I'm probably just going to pass up on this trade, to be fair, and just say that no intraday trades have been hit today. If you do want to monitor this, feel free. Sometimes I do extend my trading range by half an hour, but with there being news in the 2:30 p.m. opening of the stock market, I'm not really that bothered about it today. So I'm probably just going to leave it here, to be honest, and not take this trade. And I'm absolutely fine and comfortable with that. But if you guys want that setup, you can carry on monitoring it if you want and see how it plays out for you. But yeah, I know it's been a bit of a quiet, boring one today, but obviously you guys know that's how real trading is done sometimes. It's not always about being a machine gun and running around. Sometimes it's being a sniper and you don't get any hits at all. So yeah, cheers for the time today, guys. I hope everyone has a lovely weekend since it's Friday. After the market closed today, I'm going to record a Sniper Sundays for the weekend. I was a bad boy last weekend and I didn't record one. I'm sorry. What I'm going to do, it got to about Monday, Tuesday, and I thought, you know what, I'm just going to save it till next weekend. So this Sniper Sundays is going to be a bigger one than usual. I'm going to cover the past 2 weeks, break down all of my trades over the past 2 weeks and add it to our tracker. If you don't know what Sniper Sundays is, it's where I go over the previous week's, or current week should I say, trades, break each of them down and chart up how much I made and how much I lost from each trade. So you guys can see every single week what I'm making in the markets, and then I also forecast the next week with full weekly analysis so you can see what I'm expecting to happen. And again, we'll basically go along week by week, looking at what I predicted, looking at what happened, being completely transparent about all the wins and losses, and adding up a track record for a Sniper Sundays track record that you can follow along with. The free videos that I put on YouTube, I'll generally just show like a basic weekly analysis, just covering like one pair, but in the VIP group I'll go over all the pairs that I'm looking at. And yeah, with that, I'll see you in that video. Take care, guys.